Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York, Wednesday, June 15th, 2016, and we are looking at the Dow Jones Industrial Average, which had staked a positive gain following the release of statements and minutes by this most current FOMC meeting. And then there was a question and answer period with Chairwoman Janet Yellen, in which the net result was that the equities markets certainly closed well off of their highs, off of the positive territory they were in, to close in negative territory. Dow Jones Industrial Average closing off about 34 points at 17,640. Let's take a look at our Standard & Poor's. That also tracking lower on the day, nominally lower, but when you consider the high of 2079, the low today, 2059, we're just 4 points off of the low, closing off about 2.75 at 2063 and change. Let's take a look at our first Standard & Poor's, as well as crude oil and the dollar. Very interesting markets we'll want to explore today, all on this special report of trending markets. I thought today, as we looked at the net changes in U.S. equities, we had a very, very interesting tell come out as the market sustained its upside move. It was up roughly 35 points. I'm talking about the Dow. Statement come out from the Fed moves it up to about 60 points positive. Again, Dow Jones Industrial Average. And then about a half hour into the close, we really saw this market sell off, actually closing down 34 points on the day. You can see that with this red candle here. We did not make a lower low on the day. We actually made a higher high than yesterday, but we closed with a red candle. To me, that's significant. To me, that is really saying that we could in fact see more downside pressure in equities today. Now, Standard & Poor's 500, really more of the same, but here's what is interesting. Look at the basic range that you're seeing. Sizable, decent range on each of these days. However, the open and the close are pretty much identical. That's a doji. Doji is a consolidating candle. As we've talked about over the last couple of days, these dojis can signal a key reversal because in essence what you're doing is you're shifting the power, which is firmly in the hands of the bears, the faction that feels that equities are overvalued, and as the bulls able to take momentum, this is that consolidation period. That's what a doji is so beautiful at visually illustrating or pointing out to us. However, the same can be said as a market moves up. You'll get these rest areas. You'll get dojis as a consolidating area before returning to the overall direction of the market. And then at the top, you'll typically get quite a few of them. So what are we looking at in the S&Ps? Well, I do think we should see this market move lower. The numbers that I'm looking at right now are 2040. The lowest I think we'll see this market go to, if it does continue to trade under pressure, is about 2020. Now, I still am firmly entrenched in the belief that we'll see new record highs this year. Of course, with what is going on in Europe and the British referendum that they'll vote on next week, along with continuing concerns of economic slowdown in China, which doesn't bother me in the same way it bothers many analysts, because they were at such a rapid pace. They need to normalize at some point, and I believe that that's what we're seeing. However, with China, there's a lack of transparency and a lack of really trusting the numbers that we get. That being said, though, I do believe that the equities markets could fall under more pressure. Traders, next I want to look at crude oil. Crude oil down about $1 per barrel, 47.50, off by about 2% on the day. In my eyes, there is no doubt that these channel lines that we had put into the market, which clearly illustrated the upward move in oil and the strong bias to the upside, was trading within this channel until we made the observation a few days ago that we actually saw it break below that price point. That being said, as you know, I have now come out, and my recommendation in terms of where I think oil will go to is at minimum $46 a barrel, and it could go, I believe, as low as $44 per barrel, even if it's on a continued bullish track. And traders, lastly, U.S. dollar under fairly strong pressure today, off about 1/3%. 94.60 current print. And one thing that we talked about is the fact that we are genuinely close to breaking back below that 50-day moving average. Of course, to me, along with equities, this is a really strong indicator long-term of trend. This is our 200-day here. Green is our 50-day. Of course, we crossed above it. That was short-lived because even though we closed above it, our lows went into it, and I believe with the new fundamental data that is out there, meaning that we're not going to see rate hikes in any kind of a quick pace, according to the way Janet Yellen answered some of the questions following today's conclusion of the FOMC meeting. She spoke about over the next 2 years having a slower pace in terms of raising interest rates. I think we'll see the dollar fall under pressure. Where could we see it go to? Well, the first price point we want to look at is 93.50. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.